Welcome to the ARMR Report, ladies and gentlemen. I'm your host, Brett Rosenthal. We do this every week. It's a stock market week in review. What we're going to dive into today, a couple of things. First of all, how to decide the correct position size in your portfolio when it comes to a theme or an individual stock, because that has a major impact. The second thing we're going to talk about is market direction. We're going to look at things like treasuries, the dollar, gold, interest rates, and what it means for the market going forward. We're going to dive directly onto the Cannabis Couch, all right? Because after a tumultuous week, got to go over what our plan is to handle that sector. Then, of course, I'll always get to your Q&A. So feel free to fill up that message board, so we'll get to that later. All right. I am on a time limit today. Got to get out of here, so I'm doing this a bit early. Thanks to all of you who got up to join me for this. The ARMR Report is a process. It's a three-stage process. We build our whiteboard. It's fundamental research. We use algorithms to decide when we enter, when we exit, risk on, risk off decisions. And of course, we use stop losses to tie it all together. Those three things make a very simple strategy. And if we just focus on that process, net worth follows over time. All the other stuff is just noise. Please remember, what I share with you today is pure and simple what I do in my own personal portfolio. So I'm not telling you what stocks to buy. Got to do your own research and all those things. Figure out your risk tolerance. Make your own decisions. Do your own due diligence. But I am trying to share 30 years of experience doing this. I'm going to share my successes, my failures, and hopefully make you a steward of your own capital. That's the process here. All right. Don't forget, if you want to subscribe, you can right here to the YouTube channel. Also to the ARMR Report. Check it out if you have an interest. Always the like button helps me out. And the reason it helps me out is this. It really builds our army of analysts here at the ARMR Report. That's what I like to say. We're an army of analysts followed by a tank division of algorithms. And that's how we create alpha. So I'm sharing the algorithms with you that we've built, and we all share our analysis, right? So if we can build this community, we get better and better at it. And today I'm going to share with you for the first time, and I might do this every week, 3 stars of the week. I'm going to talk about 3 situations that come directly off of our Slack trading desk working with ARMR analysts. All right, I'm going to show you the top 3 names with a bonus 4th name. And it's just illustrates how we work together as a community to really capture upside and capture alpha. All right, if you have an interest in chatting with me, if you need to send me an email right there, info@thearmorreport.com. Don't forget, you can, if you wish, subscribe to the free email of the ARMR Report. I send this out every morning, just sharing with you our thoughts on the trading day and what we plan to do going forward. So if you have an interest, feel free, go ahead and grab it. Let's dive right in. So first thing we want to go over is the stock market itself. We'll get to Apple in a minute. So I want to tackle with you, I like to start with looking at the stock market where we are. We're 100% invested, right? We've got, when I say 100%, we've got risk monitor green. So depending on how you run a portfolio, when we're risk monitor green, we have the largest risk on positions. When we switch to risk monitor yellow, we cut those positions down. Red, we go to cash. It's really that simple. It's all based on the algorithms of the top 7 indexes we follow. The Dow, the S&P, the NASDAQ, the small caps, those are the big 4. And then we have the IBD 50, the momentum, and the value index, okay? So far, there's no chinks in the armor. It looks like the market's going higher, nothing to report. I'm going to get to you on portfolio allocation in a minute. I'm going to tell you what we're doing at the ARMR portfolios. And it's going to differ a little bit from what the algorithms are saying. So I'm going to get to that in a minute. We all have to make our own choices here. But from the standpoint of the algorithms, there is no signs of weakness. There's always a wall of worry. The reason I love using the algorithms is I could list with you, and you and I could sit here all day Saturday putting together a wall of worry, right? The topic du jour this morning that I'm reading from all the different sites that I read, right? The topic du jour is the market's narrowing, right? So there's a few really great ideas, and then there's a whole bunch of stuff underneath that's being deteriorated. I hear this over and over and over again. In every bull market cycle, it does nothing to make me money. Zero. It doesn't help me protect capital. It doesn't help me make money. It's just a ridiculous brick in the wall of worry. And here's the reason why. This process could last for months. We could have 3 or 4 months of a market skyrocket as it gets narrower and narrower and narrower. How does it help me to tell me that it's getting narrow? How does it make me money? This is what I want to say to people on CNBC. You'd love to come on here and tell me about it, but how does it make me money? How does it protect money? It means nothing, but all of those talking heads will pound the table when the market goes down and say, see, we told you there was a narrowing. I mean, they'll say it all the way up and then finally make that call. You need me? No, we're good. Thank you. Thank you, Angel. It's my lovely wife trying to make sure there's not too much havoc outside. The kids, the grandma. Anyway, so getting back to that discussion, I just wanted to say the wall of worry can stop you from making money. And so we just use algorithms here. The algorithms are risk on. Let me show you one more thing that corroborates markets going higher. All right. And that's interest rates. This is the treasury market. I know all of the downsides. I know all of the problems. I know everyone tells me there's inflation and the Fed's reducing liquidity. I know all of that. But treasuries are telling you something different. If treasuries break down and rates break out, I'll come on the show and I'll say to you, look out. My guess is we'll be risk monitor red already because the algorithms will read that. But I'll be more than happy to tell you that's a major concern of mine. Okay. But when you look at treasuries, they're just basically stuck in a range, right? They're not going anywhere. This was the pandemic rip. This was the pandemic's over collapse. Now we're in a sideways action. And quite frankly, looking at last week's action, it looks like treasuries are about to go up. Yields are about to go down. How's that possible if we're supposedly in a world where the Fed is reducing liquidity and attacking inflation and all that other jawboning to see treasuries doing that? And let's take a look at XLU. Look at utilities. It's just incredible. I don't own them right now, but I should. Why don't I own them? I mean, I own them in my dividend portfolio, but that looks like XLU is about to bake out to the upside to me. That looks like a phenomenal pattern. Now let's look at XLF. XLF's breaking down. Wait a minute. I'm supposed to believe that there's an inflation problem and the Fed's raising rates. That should drive financials higher, yields higher, which means utilities lower. We're not seeing any of that on our trading desk right now. So let's just shelve all of those walls, bricks in the wall of worry until such time as algorithms and chart patterns tell us different, right? Algorithms and price action tells us different. So right now, market's higher. We continue to stay aggressive. Now let's shift over to this discussion about the market narrowing. It makes me think, this. Don't hate the player, hate the game. I mean, who cares if the market's narrowing? Just get on what's narrowing and make a lot of money. So the top 4 names in our portfolio. All right, we already own Amazon. And I share this with you because look at the base breakout coming on names like this. And this is another piece to the puzzle on, is the market going down? Look, I don't know. We can talk about the wall of worry all you want, but I'm just looking at chart patterns, price action. These are major breakouts of huge bases for the biggest names. So that could carry for 3 to 6 months before the concern about internal, advanced decline lines actually does anything to bring the market down. That's my comment today. I know all those negatives, but look at the action and just build a portfolio that benefits from it, right? So Amazon's breaking out. We own shares of, I'm going to call it Facebook, even though they want me to call it Meta, but maybe I should call it Meta Platforms. There it is, right? We bought it right off really the triple bottom on the 200-day, pops above the 50-day, stock looks good. our first re-entry when we got the risk on green signal right back in here was to buy shares of Microsoft again. Well, that's just walking up. I mean, I don't own shares of Adobe, but I probably should because Adobe's breaking out. And we talked about this last week. Now Adobe's breaking out, right? And then let me get to right now, just because it's a fun dovetail. So let's wrap up with this discussion right here. Markets are going higher. The biggest and the best names are exploding out of bases. Not exactly sure. We need to pay attention to the wall of worry. When algorithms turn from green to yellow, I'll share that with all ARMR insiders. I'll come on here and share it with you on a Saturday. That'll tell us something's changing. Then the wall of worry might matter. Right now, it doesn't look like it matters, and interest rates are telling us there's nothing wrong. Okay? And we could throw in a couple more names. You know, we owned NVIDIA. We booked our profit, but they just blew out earnings. Stock went to a new high. We owned AMD. We booked our profit. The stock's gone to a new high. Okay? Look at these chart pattern breakouts. They're just unreal. So let me get to this segment I wanted to start doing just for the fun of it. I'm going to talk about 3 stars of the week. 3 ARMR insiders that shared information at an important moment or over time that led to the ARMR community buying these names and making money. Okay. So I build the whiteboard, the ARMR whiteboard. I got my favorite names, but what I love is all of the input from the ARMR insiders. We all work together. We're an army of analysts. I can't follow everything at once. So I feel it's almost like I used to work at major wirehouses and we had analysts and we would sit down in meetings and we would all be around the table and we'd all come in and share our information and our ideas. And that's what it's like at the ARMR report in the Slack room, except for we have a lot more analysts and we're all sharing information. Okay. So to go with these pictures of AMD and NVIDIA, let's first give a shout out to the Silver Fox, who's near and dear to my heart, and you all know why. He has been a bull on Micron for a long time, okay? For all the reasons that he shares in the ARMR Slack room. You guys can look up, just in the Slack room, for those of you who are new to the Slack room, the ARMR report, you could just put into the search bar MU and pull up all the information that's been written over the last couple of months, right? And Silver Fox has been adding this fundamental basis for why we should be focused on Micron for the last couple of months. All right. So right in here, he was all over it right here. And if you guys remember, I didn't buy it and I missed this nice run. It drove me crazy. But I said, be patient, be patient. We'll get another shot at it. And so here's the other shot. Okay. And the Fox is pounding the table on this thing as it makes a double bottom in here, right? The algorithm gives us a risk on entry right here as it pops above the 50-day moving average. We get long and now the stock is blowing out. It's up 8% on Friday because some analyst comes out and upgrades the stock, makes it the top, one of the top stocks on his list. Maybe it was ISI Evercore. I can't remember exactly who the broker was, but I'm glad they can join us. They're a little bit late, but glad to pile on. Okay, so well done, Silver Fox. There's a star. Let's move over to, we added shares of Apple right here, okay? Just as it was coming out of that cup and handle. Now, you might say to me, well, it doesn't take a rocket scientist to tell you about Apple. This isn't about rocket science. It's about more eyes on the market, all working together. We're an army of analysts followed up by a tank division of Algos. So during the day, ARMR insiders bring in ideas to the forefront. We throw them up on the screen, look at the setup. If it makes sense and it's on our whiteboard, put the capital to work. So a shout out to Erez. Erez, well done, man. And I could list a number of different names for Erez because he's all over it. Okay, all of you who know Erez in the Slack room know he's one of our best ARMR analysts. But it was so timely in the Slack room, I think it was on Tuesday, to throw out there, what about Apple, right? And within seconds of that comment, and if we go back and look, this is the day trading screen of Apple. Okay, I think it was right in here. No, it was right here. There it is. That green pennant. That comment error is made in the morning. We used our day trading algo setups to tell us, hey, is that the right entry point? And it was. We picked it off right there where that green box is and turned it into a hold for the portfolio because we want to own it right in our portfolio next to Amazon, Meta, Microsoft, Micron. Big cap tech is blowing out. So well done. Let me round it out with a shout out to Chris King. Chris King has been on this name, and I don't always make the money that ARMR Insiders are making, but that's the beauty of the ARMR report and everyone sharing information. Chris has been all over IONQ since down here, literally since down here. And it's led to this massive move higher. And without Chris sharing that information with us in the Slack room, I wouldn't even pay attention to the idea. Now it's on the whiteboard. We're doing research on it. We're getting ready for the next setup. So I wanted to thank you guys for that. And then I'll just round it out with a bonus star for myself because we're all analysts in this. And we picked off, of course, roadblocks right here on this day, right there in the ARMR portfolios. All right. And so, of course, roadblocks. And I think I shared this idea with you guys last week. It's our favorite metaverse name. I don't think it gets better than roadblocks. It's just the more I read about, the more unreal it is. And the discussion about Nike opening up Nike land inside of roadblocks, if you don't understand the unlimited, open-ended, blue sky, blue ocean opportunity that's in front of roadblocks, all you have to do is read that story from Nike. It's sick what this company is doing. So right in here, using the ARMR algo on the ARMR in the Slack room on our trading desk, right here is the day we bought it, right? That pennant formation is one of my favorite formations using the ARMR algo, which we call the price movement profiler. When we touch the prior day's lows and put in a tight pennant formation right on these black dots, which is the VWAP, we get long right there. The stock exploded, and we haven't sold it since. And the stock is now, just through the roof. So, moving right along, let's jump on to. You know what? Before I do, before I get to the Cannabis Couch, let me just tell you real quick. I had a good conversation with a ARMR Insider about position size, and it's going to segue into this discussion about cannabis. Okay. Position size is probably the most difficult thing an investor can wrap his head around, her head around. Okay. The reason is the position size is never going to be right based on your emotions. The ones that go up, you'll never have a big enough position on. The ones that go down, your position's always too big. It's just a human condition. So we've all fought it. I still fight it. I was readjusting my portfolio this week because I realized I have too much exposure to my fundamental beliefs and not enough exposure to my algorithmic facts. And so I've shuffled my portfolio to better reflect the ARMR algos, both swing trading and day trading. Excuse me. So there's two things I would recommend you do if you're looking for how do I deal with my position sizes because I'm getting blown out and I'm not making enough money on the good names. Number one, every position size the same. That'll just take care of the problem right away. You put on, let's say you have $100,000 you're running and you put in 10% in every idea and that's it. Or you put 5% in every idea and that's it. Stop overweighting what you think is great and underweighting what you don't. First of all, if you don't think it's great, why are you buying it? Second of all, what you think is great, I can't tell you how many times it's going to be the worst name in your portfolio. I don't know why it works that way. It just does. So this is the investing correctly to a large extent is about probabilities and statistics. You do all the research you can, and then you have to put capital to work understanding probabilities. Some of those names aren't going to work. Some of them will. You can't tell which ones it is, which ones they are. So what you do is you have the same position size across the board. You use your stops, get stopped out of the ones that don't work. The ones that work, you have a big enough position on to make money. The other thought, and this was a great idea, the ARMR Insider shared with me what he was doing, and it's, I've done this in the past myself, so it's brilliant. I'm glad he brought it up, so let me share it with you. You figure out what your stop is, and you determine your position size based on the distance to the stop. So the way he describes it is he has a certain amount of money he's willing to lose on every position. If the stop is 10% away, then his position size is X. If the stop is 5% away, his position size would be 2X. It's going to be the same dollar loss, right? So the position closest to the stop is a bigger position. The position further away from the stop is a smaller position, allowing him to manage the position correctly to the stop and not meddle with the position as it's bouncing around. Brilliant. Probably the best way to do it. And I'll tell you what, over time, what you'll find happen if you do that is you'll be buying more and more and more names that are closer to the stop, which is going to make you a much more successful investor. Because here's something I can guarantee you. Your best trades never challenge the stop. Never. So if they're even challenging the stop, there's something wrong. Okay? Don't believe me? This is our best trade right here. We picked off roadblocks. The stock has skyrocketed. It never even came close to the stop. Never. We just picked off Apple. Right in the base. Right here. Never came close to the stop. So when you're on something that's challenging the stop, it's probably wrong anyway. All right. So following that idea is brilliant because it'll force you to buy closer to the stop. All right. Let's jump into the Cannabis Couch now because let's talk about stops. I'm going to start with MJ. I don't own a single Canadian cannabis company. I don't own any of them. We started the week with Canopy Growth, Tilray, and Village Farms. We sold them immediately when they reversed. We had a raised stop on them. We just exited quick. If you're going, so rule number one, on the Cannabis Couch, we'll all take a deep inhale and hold it for a minute so you can listen to what I'm saying, okay? We're in the process. Those of us who like cannabis are trying to find a bottom. It's not easy. I told you this 2 weeks ago when we started buying them. There's tons of overhead. It's going to take time. There's going to be volatility. If you're not okay with that, you shouldn't be investing. I see a lot of people crying on the internet about cannabis companies, okay? They're just revealing that their position size is way too big for their portfolio. At the beginning of a move, when you're trying to identify a bottom in an asset that's been destroyed, you can't have a huge position size on. You got to have a size on you can manage. Now, if you increase the size because you think it's working, then you got to raise your stop. So the minute it reverses, you're out. And this is what we did last week in Canopy Growth. Okay. So we had positions on here. It popped above the 50. We added to it. Okay. It reversed. When it took out the low of this bar that went above the 50, we were out right here this day. Gone. It's over. We're not waiting for it to come down and challenge the stop here. Okay, Tilray, same situation. Back below the 50, we're out of the stock, right? Village Farms, right in here. So we're gone by Wednesday. It could have been Tuesday at the end of the day, or maybe Wednesday morning, first thing in the morning. Okay. So I see the story over the weekend, or was it Friday at the close when Kronos decided to hide this story and, put it out right before the close and everyone's gone for the weekend and, for a holiday weekend. So Kronos plummeting to new lows, and they announced that they may be delisted from the NASDAQ because they haven't filed, 10Q or something? It amazes me that Canada and California have completely ruined a very simple business. I mean, I don't get it, but okay, let's don't get into that. So obviously this isn't working. Maybe they haven't filed their 10Q because, I don't know, Altra is going to just take them over. I don't know. Probably not. Probably there's something wrong inside of Kronos. Okay. So when you get a high profile name like Kronos that may be delisted because they're not filing their 10Q, it just, there's the roach theory. There's never just one roach. So there's like a complete abandoning of ship when it comes to Canadian companies. We don't own any at the ARMR report. We are going to focus on U.S. Cannabis. All right. And you'll notice that U.S. cannabis is well above the lows. Had a terrible week, granted. Had a great week the week before. Right. So all it's doing is etching out a bottom. If it can hold in here and start moving higher again, then that's a normal pullback as you're trying to build a base. All right. Now, if I come talk to you next week and MSOS is hitting new lows on the year, you better believe I won't still be long the cannabis names. We use stops. We raise our stops. We reduce exposure if things aren't working for us. Right. So I've already reduced exposure last week. No matter what happens to cannabis from here, it's not going to ruin my year. Now is not the time to be incredibly aggressive in these names. But if they make higher lows and they etch out a bottom, then what we're going to want to do is buy a weakness and build out positions. So those are my thoughts on cannabis. Everybody take a deep breath, relax. When you're trying to make a bottom, this is what happens. All right. Top name I'd like to add to the cannabis space, if I'm buying an individual name, I think is going to be Scott's Miracle-Gro. The more I listen to that conference call, the more research I do on it, I think this is a no-brainer way to get involved. I really like this idea. So I might be adding that to the portfolio. So in other words, I wouldn't necessarily buy more MSOS right now, but if I see that whole space bottom, make a higher low, reverse, go back above the 50-day moving average, I might add Scott's Miracle-Gro to the portfolio and build out my U.S. cannabis exposure. So that's my thought there on cannabis. Now I'm going to rifle through a couple. I got a few minutes here and then we're going to get to Q&A. So I'm going to rifle through our favorite names at the top of our whiteboard. The purpose is not to tell you to go run and buy them. I'm not telling you to go run and buy anything. I'm sharing with you my own approach, how I run my own money. You got to do your own due diligence. I just thought I'd highlight these names. I think require a deep dive into due diligence, so that you can add them to your whiteboard. And then if you choose to at some point in the future buy them, you'll be prepared for it. So now's the time to do research. And these are top names on our list that I thought you might like to get a peek out. So we already talked about Roblox. All right. That's at the top of the list. I'm not adding any more up here. We already added it, right? But when it builds a base, I'll be looking to add at higher bases. Okay. Unity is the very next name. I don't own Unity right now. I should. I owned it in here, made some quick money and missed all the big money. So I'm looking to add shares of Unity. They did a convertible debt offering up here that I hope puts a top in for now, brings the stock down a little bit. I really like AFRM. They also did an offering. So that's put pressure on the stock and driven it right down to the 50-day. I'm waiting for the pattern to develop. This could be a great opportunity, an entry point because of their equity offering, or maybe it was convertible debt. I can't remember which, but it's the same effect on the stock. Airbnb, love this story, driving it down because, pandemic woes lift their ugly heads, but I don't think it's going to stop anyone from traveling. And so I'm looking for my way into Airbnb. Here's a little fun idea. That every time I listen to the conference call and I go over earnings, I think that this is a big stock. I know it's crazy, but it's something you might want to take a peek at. I don't own it right now. It's on my list to do research. FNKO, FNKO. All right. SOFI, interesting story on SOFI, right? One of their biggest investors, dumped all of his shares last week. And so the big question is, do you want to own it before the bank charter announcement? They also did, I think, a convertible debt deal, raised a lot of, they didn't raise cash. That was a selling shareholders, what that was. So anyway, it's driving it down to the 50-day moving average. I like the idea. The pattern looks reasonable. If it finds support in here, it could be something to add. On the retail front, retail looks pretty good. And I really like Levi's story. This is a really compelling story. Go listen to the conference calls. Okay. So it's breaking out of a huge base, pulled back, double bottom right here. We own it right in here. So full disclosure again, we already own the stock right in here and it's creeping higher. but I really like that name. And we still own some PCS, right? It had that huge run up here, and it's just consolidating that gain right at the standard 200-day moving average and the 9-day exponential. So it lives to fight another day. I like that pattern, and I like what they're doing. Okay. So last thought. Here's, Micron, we already own it. WDC is on our list. We actually own the stock. Had a nice breakout and an immediate failure. If it takes out the low of this big up bar, we'll get rid of it. But I do think that usually Western Digital follows Micron. So if Micron's really going to work, I expect Western Digital to join the fray. And with that, I think I'm going to throw MTTR up there also. I don't own it. I think there's issues fundamentally with the company right now, but what you want to do is get comfortable with these ideas. You want to listen to the conference calls now, read all the information you can to understand the business model. You'll see why at the moment they're having trouble. They make hardware, they can't access parts, there's supply chain issues, all this stuff. So they're not going to, it's going to be a lumpy ride when it comes to earnings, but they're driving their business towards a subscription model, and it's probably a big win for the metaverse at some point. All right. Anyway, those are my thoughts right now. I'll get to your questions. Thanks for spending time with me. What do you got? And who's with me? Who's with me? I see some of you on here got up early on a Saturday to join me. All right. Questions. DBA. I think DBA makes a lot of sense. And we talked about this, Robert, I think a couple of weeks ago. I think even last week we talked about it. This was a pennant breaking out, and it's totally followed through. I gave it a pass because I shouldn't have given it a pass. I mean, it's a future, it's an ETF of futures, and there's just a whole bunch of, I don't like the structure of the ETF, so I didn't buy it. And what I said was, this looks like we're going to get inflation on all types of commodities. This is a commodity, agriculture, blowing out, cattle is in here, all kinds of stuff is in. So you got to go look at ETF.com to see what's actually inside of this. But anyway, that's a very impressive breakout on agricultural commodities. And so it makes me think, for me, I can understand owning this, and it's a great idea, and it should be owned. It should be owned, okay? It makes me really want to own shares of Deere. They cut that deal with the auto union, and it looks like a bad deal for them, but probably that's because their business is exploding, and they don't mind cutting that deal because they want to get more product onto the shelf because their business is exploding. So I think they announce earnings next week, right? Is it next week? I'm not buying this thing in front of earnings, and they'll probably talk about, in 4 days, they're going to talk about their earnings. So I'm not buying Deere in front of earnings, but I want to see what they say on the conference call. They'll probably go over their new labor agreement, and maybe on weakness, that would be a great opportunity because I think agriculture is going higher. What do I think about MU? I think it's going a lot higher. I mean, a lot higher. I think MU breaking out of that base is at the very least running to 100, and usually stocks that hit 100 go to 130. That's just a weird fact of life. So I think there's a lot of upside in Micron. I'm glad to see you, Robert. Thanks for joining. LD, how are you, man? Yeah, they're right back where we started. And if they make a higher low, then we can increase our position size. So we've already gone over that. And I hope you're not over your skis on those positions yet. All right. When would you consider getting into PayPal? God, that is just an awful pattern. And, I hope you all were listening when we talked about that back up here. I mean, we avoided this stock way up here. And I know some of you asked me when it first broke down, should we buy it now that it's down here? And I said, you just can't buy a stock breaking down from a top like that. That was back here. It just looked awful, and now it's just getting worse. I don't see any reason to own PayPal at the moment. So waiting for a bottom. That's a classic example of trying to catch a falling knife if I buy it here. I mean, there's just no reason to own it right there. So FYI, At the ARMR report, I have two ways for subscribers to subscribe. They can go through PayPal or they can go through Stripe. And I can tell you that the vast majority of people use Stripe. I mean, like nobody uses PayPal. So there's a problem here. Whoa, there's a problem with my camera. Oh, now I'm fuzzy. Wonderful. I hate when that happens. All right, well, you don't need to see me. We'll look at charts. So anyway, PayPal is out for me. I don't have an interest in that chart pattern. And let's look at Square. Square doesn't look much better, does it? What about MasterCard? MasterCard and Visa, they all don't look good. So something's cooking in this space and it doesn't look very good. God, look at Visa's getting crushed. Forget it. Forget it. I wonder, does it have anything to do with this? And, this whole launch of AFRM holdings and just a complete new way of paying for things? I don't know. Telray seems to be in big volatile territory. And I think we're about to break and hit. Oh, I hope you're right. Wouldn't that be great? The only problem is Telray is attached to a group that is making new lows for the year. So even, don't forget this. I want to look at you when I talk to you, but I'll just go like this. Don't forget, group moves are bigger than any one stock. So if the entire group is doing this, which is plummeting to new lows for the year, it's going to make it very hard for Telray to break out and run to 15 or 16. So just be advised. You're not receiving the emails. How's that possible? All right, do me a favor and send me your email again to info@armorreport.com. info@armorreport.com. All right. And I will, I'm going to get on that. Oops. I'm going to get on that Monday morning and see why it's not coming through. And also at the same time as too, do me a favor and check your spam. Okay. Check your spam folder just in case it's there. Hey, Mo, what's happening? Any thoughts regarding EV? Yeah, my thought is I've completely missed it, and it's a little embarrassing. My two favorite names, but my other thought is that we always get another shot in the market. The market always gives you an opportunity. It's funny you bring this up because I was just looking at SDGR this morning before I came on. Oh, that's not what I was looking at. What was I looking at? SEDG. Okay, Solar Edge is one of my favorite names in the space, and it's making a little cup and handle right near at the highs here. It looks delicious. And end phase, just a total blowout on earnings. So my thought is there's no way I'm chasing any of these names right now, particularly on the back of the president signing, infrastructure bill. So these things are running up right on the back of an infrastructure bill. And that's great. But normally I would sell that news. I wouldn't buy it. And I certainly wouldn't chase the names. So the time to own them was before. And I think, Mo, you're on them. I mean, you talked about them. But look at Sunrun. I think that's one of your old favorites, Mo, isn't it? And Sunrun hasn't taken off yet. That pattern looks like it could be bought. The EV space. I mean, there's so many EVs. I was commenting recently on Friday, actually, on RIVN. I keep wondering if this thing is going to fix itself so I can look at you when I talk, but apparently not. I can't believe, did you see the story? Ford decided to stop all, the release was Ford and Rivian are no longer going to work together to come up with EV products. And then another story was Amazon announced that something might be wrong with their batteries. And so the stock comes public to this great fanfare and all this excitement. And then 8 days later, we have those announcements and the stock's coming off. This whole group stinks to me of way overextended on pie in the sky and not reality. That's what it feels like to me. So I think all these things need to take a break. All of them are going to come down. Be happy to buy these stocks on pullbacks, on consolidations, on new chart patterns, but not really interested in running after them right here. That's my thought. And of course, I could be wrong. I've been wrong on this sector, before. So clean energy. That looks like a great chart right there. I'm going to write that one down. ICLN. Oh, you know what, Robert? You were asking about DBA, and I was looking at this today. So you're getting, agriculture commodities breaking out, and then look at Weyerhaeuser, which is a REIT that owns a whole bunch of timberlands. This thing is starting to set up and getting ready to go again. So there are inflation, signs all over the place. And then we go look at treasuries and they're doing this. So bonds aren't getting hit, rates aren't going up, and gold, I'm going to look at Sprott physical gold. It's had a nice breakout, but then of course it's consolidating, which is normal going into the end of the month. I'm not concerned about this, but it's not like gold is skyrocketing, but that is a good looking chart right there on gold. I know gold and silver stocks were down on Friday. Let's be honest, they had down on Friday. I mean, everyone gets so upset because they have a down day, but they had a real nice run from the bottom in October. They made a higher low in November. They, made a higher high already in November. They're going to pull back a little bit. That's fine. As long as they're in an uptrend, this group is something I'm staying with. ICLN, I'm going to take a look at. FL. Locker. I don't know. I have to go look at that earnings announcement. That chart doesn't compel me at all. But how about Under Armour? That chart looks really good. I could see adding Under Armour alongside a LEVI and some other retail names that look pretty good. Tractor Supply blowing out. Hey, Gary Rosenthal. Nice to have you. Right, best agriculture. So here's the comment from Gary. For those of you who don't know, that's my dad. Nice to see you, Pop. So there's the move in Tractor Supply. But if Tractor Supply is doing that, then how is Deere not going to work? This has just got to be the problem with the union. This thing has to work if Tractor Supply is going to skyrocket. But you've been all over that. Great call. You've been all over that, saying that this is the place to focus on, and you've been 100% right on that trade. Viacom. I got nothing to say on Viacom. This whole craziness because of that hedge fund, and there's nothing to say there. That other than that pattern looks awful, and there's no reason to buy it, Dennis. I don't see any entry point. There's got to be a reason to put money to work. Higher lows, higher highs, bases. Let's just remind everybody, for instance, of this is what you should be looking for. Okay, I talked about AMD, and I highlighted this for you, and hopefully you guys made money with us on this idea. You're looking for a base structure like this that's in an overall uptrend, not something imploding, right? And then you want, this is like this is a centerfold. You should print this chart up and you should put it above your desk. And you should say to yourself, how do I get long this type of a name right in here? Right in here as it starts to come out. Look at that chart pattern, and then not to, beat a dead deer, but deer is making a base on the 200-day moving average. It doesn't look sexy right now. Okay. But it's building a base. And what I'm looking for is a base like this to build on the 200-day moving average, and then the trigger buy signal right in here, right? And you start to get long, boom. Or you miss that whole move and you buy the first pull back to the 50-day and catch that move, bang. Okay. And so when I look at VIAC, I'm just asking you, where's the chart pattern that looks attractive? what happens if you have too many ideas like that is you suffer through something like this. So you're going to ask yourself, well, why is Brett buying MSOS? And you'd be totally within your right to ask me that. I forgot. And your right to ask me that question. I don't know why I am. I just fundamentally love the idea of cannabis, so I keep trying to find my entry point. But, quite frankly, there's no pattern yet. It's making a higher high. That's great. And now I have to see if it makes a higher low. And then I can start really buying it. Right? Like GDX. GDX. Double bottom, higher low, higher high. Now it's in an uptrend after a big sell-off. So I'd have to see that type of setup in Viacom before I would get interested. Happy thing. Hey, thank you so much. You know what? New York Jets fan, Jets, Jets. I love it, man. Thanks for those thoughts. I really appreciate it. Glad when you joined. SFT. Where's your stop loss discipline, brother? That's my thought for you for the rest of the weekend. LD, where is your stop loss discipline? Somewhere in here, you need to be stopping your loss out instead of riding it all the way down. And on that message, guys, I have to go. It's been a lovely Saturday chatting with you. I'm going to leave it on Roblox because that is just, the star of the week for the ARMR report. And it's so much fun to look at. So I want you all to enjoy that view. And I'll see you all next Saturday. Have a great weekend, everybody. Oh, wait a minute. Rich White, we got one more question. Education video options, please, particularly covered calls. Okay, that's a great idea. I'll do that. And Rich, it's interesting because what we talked about up here on Pfizer, just to give you guys a quick look here. On Pfizer, we bought Pfizer right in here at the ARMR report with a 4.3% yield. So it was a stock we're going to buy. We're going to pick up a yield. And then the thing blew out, which was great. And right in here, I said, it's time to write calls. You can increase your yield by writing calls right here. So what you're asking me to do is tell you, go over with you, Rick, exactly what it means to write a call, because that's what a covered call is. You would sell your calls on Pfizer right here. What's the, how do you do a covered call? So I can definitely do a short video on how to do that, Rich. Rich, are you I can't remember if you're an ARMR Insider or not, because if you are, we have the education channel inside of our ARMR Slack trading desk where I put up information just like that. So I could certainly do that. I'll do that immediately for ARMR Insiders, and then I can release it to all of you. Just a quick video on how we would put that covered call on, because I talked about it again right here. I think it was actually on Friday. I was sharing this idea with ARMR Insiders. We kind of debated, should we be selling those calls right here or wait for the next move up to the 4th standard deviation above the 200-day? See, when we run up to this blue line here, that's the best time to write a call, because it's so far away from the 200-day moving average that typically, statistically speaking, over the next 3 months, you're going to get a sell-off back down towards the base. Okay? And so that's exactly what happened on Pfizer. So maybe what I want to do is wait for it to get back up here again, but it's so rare that Pfizer makes it all the way to that line. I don't know. But I'll definitely go over that with you. Hey, Rich, happy Thanksgiving to you as well, my friend. Always settle early on blowout earnings and strong guidance to avoid tougher years. So you're saying, so what Silver Fox, I just let the cat out of the bag, Dad. What Gary is saying is that he'd probably own some deer in front of the number, because he thinks the reason they settled is because they're about to announce blowout earnings and strong guidance and they're happy to, deal with the union demands. And he's probably right on that. He's probably right on that, particularly when you see PSCO skyrocketing. All right, let's end it on a silver fox call that we captured that looks just beautiful. Micron. Everybody have a great weekend and a great Thanksgiving. Take care, everybody.